Greetings, everyone. Welcome to our exclusive Global Leading Voices webinar campaign. We are delighted to have you join us here today. Please be informed that if you have any questions during the presentation, you may type them into the question box in your control panel. The presenter will answer your questions at the end of the presentation accordingly. Now, without further ado, we will turn the time over to our presenter, who will begin shortly.
Hello, this is Ken Kimbel. I'm here today to complete this webinar. The topic that we're going to discuss today is what to expect from blockchain in 2019. I'm excited to kind of get into some of the things we'll be expecting from blockchain, not only in 2019, but kind of I'm going to outline some of the things to watch out for the next 10 years. So starting here, the agenda today for this presentation is the following. So we're first going to do a brief introduction. There are a lot of things that are foundational I'm going to hit on. I've also done another webinar for PECB that covers more introductory material. So if there's any gaps that you have or any foundational questions at the end of this, as always, feel free to email me directly. The email will be at the end, or maybe first check out the first webinar that was more of an introduction with more examples. And the second thing I'm going to talk about today is blockchain use cases. Now, these use cases are going to apply to 2019. And they're going to also be things you've heard about before, such as smart contracts and tokenization and those sort of things. And then finally, we're going to talk about what to expect from blockchain technology in 2019 and beyond. So the first section here is a brief introduction. So I would say the most foundational understanding that you need to really understand why blockchain technology is important and why it works and why it's a technology that will continue to improve is because foundationally it's very solid. So blockchain technology has 4 qualities, and these are very crucial to all of the benefits that I'm going to talk about that will come from 2019 and all of the reasons why it's being used more frequently today than it was a couple years ago, because these qualities are really important and they're helping businesses develop at a quicker pace than they could without them. So the first thing is blockchain technology offers immutability. So what this means is you can't delete anything from a ledger once it's created. Second, it's appendable. Obviously, this needs to be because blockchain technology, you have to be able to add to it to make it valuable. And then third, and maybe the most importantly, it's universally distributed. So a lot of the use cases and future use cases are going to be about decentralization. When you hear kind of decentralization, this is kind of the principle they're talking about. Universally distributed means it's not all kept in one place, and there's checks and balances. And then open ledger. So it's a place where everyone can reference the open ledger, and it's universally distributed. So kind of those things together is you can't delete anything. You can add to it. Everyone has a copy of the ledger. Everyone can see every transaction that's happened. And I'm going to go into a quick example here real fast. So an example I like to use, this simple example. So imagine a coffee shop. So currently, if you go into a coffee shop and you want to buy a cup of coffee, you give the barista either a credit card or you give them money. And let's say there's 2 people in the coffee shop with you. So in the first example, you give the barista money and they give you the coffee. With blockchain, the way it would work that's different is there's no transaction of cash, but what you would do is you would basically say, I want to make this transaction, And you can picture everyone in the coffee shop in this simple example opening up their ledger, as, like imagine a book, but really it's not a book. But just imagine everyone updating the amount at the same time. So what this does is it makes it much harder for people to be exploited, because transactions really can't be changed after the fact because it's recorded by everyone. And as I'll get into more detail in the next couple slides, if the coffee shop owner or the barista tries to change the transaction after the fact, that will be invalidated due to long chain validation. We'll briefly hit on that. So another thing that is kind of crucial to blockchain is SHA 256. I mean, eventually this will probably be something else, but for now, this is the kind of the foundational one that is used in a lot of blockchain applications currently. So the most important thing about this encryption method is the codes that are generated are both completely unique and they never change. So what that means is, in this example, you can see, so ABC with a capital A yields that 64 string of characters. And then if the B switches capitalization, it yields that the second line. So the first string of 64 characters that you can see is yielded from inputting ABC into an SHA 256 generator. So you can Google this and get one of these and play with it. But the basic idea is these two hashes. So if you go to a generator and you type A, capital B, lowercase c, you're going to get the same exact hash. So that's kind of the meaning why they're always the same. Now, the reason why they're always different at the same time is you could enter any string of characters. This could be like an essay even. And it will always create a different hash, no matter, so the text you enter in will always create the same hash, but if you change any part of it, it will create something completely new. That's why it's so hard to decrypt these. So you hear people losing their passwords or passing away with a bunch of Bitcoin or something, and they can't get the password. This is why. It's literally, technically, it can be broken, but with all the best technology today, the rough estimate is around 1 billion years to crack SHA 256. So it's very secure. So basically, if you want to trust blockchain, to trust blockchain, you have to believe in the hashing. My first video kind of breaks down hashing a little more. This is an introductory for more experienced people. But basically, long chain validation is what kind of creates the validation. So as I was saying earlier in the coffee shop example, everyone has access to the open ledger. Everyone records every transaction. So if a malicious actor changes, let's say the hash is created from a bunch of things. So it's the nonce value, it's the public, it's the private key. There's a lot of things that kind of filter into that. But the most important thing is that creates a completely unique value that is on the blockchain. So in this previous example with ABC, you can picture the number 4. So say you pay $4 for the cup of coffee. If that amount of money increases, so say the coffee shop owner wants to switch it to 5, that will completely change the hash, and everyone else's ledger will say the right number was 3. But if they switch it to 4, that transaction will be rejected due to long chain validation. So each block, when it's generated, references the hash of the previous block behind it. So if the coffee shop owner changes that character, it will change the entire hash, and then the blockchain will become forked, and it will spread off and no longer be validated or seen as part of the main blockchain. So this is kind of the long chain validation I was talking about, the proof of work concept. So here the fork occurs when the hash output of a block is changed after it's been introduced and recorded on the open ledger. So importantly, the ledger is distributed to everyone. It's an open ledger, right? So everyone who participates within the blockchain has access to that. So when one person makes a change to block a hash that creates the blockchain, that change will be tested against everyone else's ledger, everyone else's chain, and the longest validated chain will be the one that is accepted for the whole blockchain. So now we're going to kind of go into some blockchain use cases. So the first thing that is important is kind of recognizing the security that blockchain provides here. So if someone tries to change information within a block, as we've talked about again and again, since everyone has the same copy of the ledger, that transaction will not be considered valid. There are a couple of interesting cases currently with Bitcoin where due to kind of advanced factors such as the time, we'll talk about this a little bit when we get into Bitcoin. I have a use case in here that kind of breaks down the possible, normally a fork in the blockchain is something that's seen as bad, but there's actually a lot of the new, there's a lot of blockchain-based currencies that actually rely on forking a blockchain and then creating efficiencies from that forked blockchain. But we'll talk about that in a bit. So as we talked about, so this is when so recognizing the need that blockchain creates can be easiest to see when you kind of break down. So the definition we've talked about before is it's immutable, appendable, universally distributed, open ledger. So what this does is it allows, if it's used correctly, it can allow the population to participate in a global economy. So examples of blockchain technology used for things other than Bitcoin, which is the most classic example, is for things such as voting. So Estonia is actually an interesting case where they've used voting. They've actually moved to the internet for a lot of their voting. I believe around 44% or 43% of their whole population voted online in their 2019 election. The reason why this is possible is because they incorporate blockchain technology into their voting system. And that allows more people to participate in the voting in that country, which is pretty huge. It's definitely 43% is a huge increase to what it was before 2004. And part of the reason for that is blockchain technology is basically making it easier for people who might not have access to voting areas or maybe work or maybe out of the country for business. They allow them to vote. And this is validated essentially by using a blockchain and making a very secure account that is tied to one person that cannot be changed maliciously, or else it's universally reviewed. Since it's decentralized, everyone who participates has access to the ledger, and they can spot malicious activity. And then essentially at the end of the voting period, they use the long chain validation, finding the longest chain of the most valid votes, and that's the way they kind of determine their elections. Interestingly, in 2019, I would expect a lot of countries to at least start, maybe not for their main elections, but Switzerland has actually started doing some tests where they primarily rely on users using mobile phones, which obviously could work in Estonia as long as you have a browser. And initial tests seem to be very positive. There's a lot of companies that are focusing on using building blockchain solutions specifically for voting purposes. So I would not be surprised to see on a small scale within Europe and the US for blockchain to keep spreading pretty aggressively in that front from the voting perspective. Now we have another example. I think everyone knows kind of Venezuela has had some major issues as of late, but they actually were one of the first nations to have a currency within Venezuela. I think it's called the petrol, or I could be getting that wrong, but it's called. But the main point behind this is what makes it a currency that is tied to Venezuela is they use their gold reserves and they use their oil and gas and natural resources to back a currency. I believe they had an initial offering. They basically tokenized their natural resources and gold resources, which we'll define in a couple minutes. And they essentially started selling or offering those to the public. So there's been a couple major issues with this offering. When I last did this presentation, it seemed very promising. And now, due to all the kind of the strife within the country, the US, first of all, the currency was built with the help of Russia to kind of skirt some of the US regulation. Because of this, they had limited participation from US citizens. Further, the other issue is they offered two classes of coin. They offered one backed by gold, and then they ended up splitting it. So they offered a premium and a non-premium. And then the final issue with their offering, which is a major issue, and it's also an issue with things like Bitcoin, is there's a major issue of once you buy this coin, of how you actually use this virtual currency. There was a interesting article that claimed there has been some outgoing currency. Venezuela told their citizens they can pay taxes, they can do anything to the government with this currency. Unfortunately, as of now, it seems that there is actually no way to use this currency, which is kind of a nightmare. So the blockchain technology is working. They actually made all of their coins. So they did all of the nonce value calculations and created everything before they started distributing the coins, which is a kind of interesting way to do it. So every coin that will ever be associated with this blockchain has already been made. That definitely that has some potential downfalls with doing that. So it will be interesting to kind of keep up with this. If you're passionate about blockchain, I would recommend researching Venezuela and figuring out the interesting thing about Venezuela is their actual use of blockchain was okay, but they didn't make it accessible. That's a big issue with currencies right now. Even with Bitcoin, there's limited ways where you can actually go down the street and buy a soda with it or things like that. And that's an area where, especially in 2019, but probably in the next 5 to 10 years, that will really improve as currencies, virtual currencies that are backed by something such as blockchain continue to develop. And the reason why these are going to continue to develop is it's a trustless system. So normally you have a bank where you have people who are employed full time to try to keep track of everything. So you have full-time employees that are responsible for making sure accounts have the right balances, that customer service lines. But the hope with blockchain is that eventually maybe banks will be replaced by blockchain solutions that are trustless. So you won't ever have to worry about the accounts being accurate because the technology itself is distributed. It's an open ledger. And the way it works with long-chain validation is you won't have to spend a lot of time worrying because at the very core of blockchain, it allows you to trust people without actually knowing people. So you can make transactions in the public, like the coffee shop, for example, and you don't have to worry about trusting the coffee shop person that they'll charge you the right amount or they won't change it after the fact because everyone in that coffee shop basically completed the transaction with you, and it's all part of everyone's blockchain that they have access to. So continuing here, as we mentioned, a lot of the benefit in 2019 is going to revolve around blockchain technology continuing to be used for decentralized uses. The beauty behind blockchain technology is it provides an equal playing field for everyone who wants to participate in a global economy. India, if you want to kind of research specific countries that are trying to specifically use blockchain to increase participation in their kind of culture and their just in general, India is probably one of the best examples since a lot of technology there capitalizes on blockchain and all that the citizens need to participate is a cell phone, which is still a lot. But cell phones are also becoming more affordable and more regularly. A citizen within India has a cell phone today, which is definitely a step forward. A couple interesting examples of blockchain technology is, first of all, there's this idea of decentralized internet. So the idea would be that if you have, say, you have internet speeds that you're not using, using blockchain as kind of a foundation, you could kind of tokenize that internet, which is a buzzword right now. That's going to be a very hot. Tokenization is going to be huge, and I'll explain shortly why that is. But basically, it will allow you to break your internet into chunks, and if you're not using all your internet each month and you're paying $60 for internet, you can sell your internet to a different country, or you can sell your processing speed, your storage across your cloud storage to third world countries. You could sell it to your neighbor. It allows for a lot of interesting options, and then we have a really interesting example, which is blockchain has been used to fund farmers in developing countries. Now, this is possible due to smart contracts primarily. The next slide will actually give you a more detailed view of smart contracts. That's very crucial. As we mentioned, the technology itself is trustless. It's universal. It's universally distributed. It's an open ledger, and it's appendable, which means you can add to it. And you can't remove transactions, as we talked about. That's the reason I keep repeating that, is because that's very crucial. And the fact that you can't do that allows you to create a smart contract and remove the bank out of the equation. So you can use an app like Ethereum, which has smart contract capabilities. And if you want to invest $80 in a farmer in Venezuela, or let's say Central America, who wants to plant a field of crops, and it's a low risk investment for you, but it's also a great way for them to get money to basically sustain their farm without having insane interest fees that are normally associated with, unfortunately, they're associated with funding farmers in developing countries. The interest rates they get charged without a kind of a smart contract or blockchain solution is predatory, and it can lead to a lot of other issues that I won't get into. But basically, there's also, thanks to the decentralized nature of blockchain, it also allows you to kind of do like a vote on your funding, or figure out, you can say, I want to fund this project if it gets X amount of money. So say if 5 other people pay $50, I want to also pay $50. So that's a feature of a smart contract, and that's going to grow it hugely in popularity. This is already maybe one of the most well-developed uses, since a lot of people are very passionate about this cause, and it's actually relatively simple at this point in time to use it for this use case. I would fully expect this to be more mainstream by the end of 2019 and continue to develop. And then we have democracy via the public ledger, which is basically those voting examples. There was a scare a couple of years ago with France's election, which really forced them to kind of start considering technology to help reduce possible voting fraud. I would expect France to be adopting, they were very close to adopting blockchain technology within their democratic system, but I would say that within this year, I would expect them to fully adopt it if they haven't already. They might have already done it. So essentially, as I was saying, smart contracts, what they allow, this is kind of a fundamental aspect of blockchain technology. So smart contracts allow, I mean, in their simplest terms, the first line says a lot. So it provides an opportunity to exchange value and information at the same time. So what does that mean? That means that you can set parameters that are required for a transaction to occur. So, for example, think about the example I gave last time. So say a farmer needs $10 to plant a plant or a crop. And the way you could use a smart contract is, say you only have $5 and you want to invest because maybe the plant will grow for years and yield $5 a year or something. So the way you would make the smart contract is you would say, I'll pay $5 for this tree, but then you can also, so that's the value, the 5. But for me to exchange this value of $5, I also need for you to get my $5, you also need someone else to want to pay $5 to buy one full tree. So the way that works on the farmer's end is they see, okay, so I see I have someone who wants to pay $5, so I won't get that money until another $5 is paid. And then once that $5 is paid, the transaction will occur. So it's kind of a seamless system there. And then in the first presentation, I went more in depth in the smart contracts and especially with forking. But I think I'll mention that in the Bitcoin. Okay, so now we're to another use case. So as everyone should probably know, Bitcoin is a currency. So Bitcoin is kind of the first, I think it kind of got blockchain technology on the map in a lot of respects. A lot of people will confuse Bitcoin with being blockchain, which is a common, since you guys are practitioners, you probably see that a lot. It's very hard when I'm talking with relatives to disconnect Bitcoin from blockchain technology, but at the same time, it's a good example to kind of show what the technology can do, and then also areas where in the future you're going to see virtual currencies improve upon, and then over time probably overtake Bitcoin. So now the reason why Bitcoin is a currency is simply because you can buy Bitcoin right now on something like the Cash App for actual currency. So that's what makes it. It can be exchanged for goods or services. And yes, some people do accept Bitcoin. It was more popular while it was maybe a couple of years ago when it was exploding in growth. And I think today, and especially in 2019, I would be surprised if you see a lot of services accepting Bitcoin as payment due to the volatility, but it's a high risk, high reward. So I'm sure you can still find people who want to do that. So next we're going to go to, so one of the first uses of Bitcoin. So this kind of shows us kind of the anonymous, that you can be anonymous and use Bitcoin or use blockchain technology. So Silk Road was basically a black market on the dark web where people would buy drugs and that sort of thing. And the reason why Bitcoin became synonymous with this dark web website was because Bitcoin only displays the user's private or public key, actually, not private key, but and so this allowed people to send, buy, purchase drugs that were illegal in many cases, and then receive goods, because the reason why Bitcoin, I'm mixing them up just like everyone else. The reason why Bitcoin here works so well is because you could be anonymous. So you can make a transaction anonymously. So it can't be tied back to you. It's very private. The space that I work in right now, a lot of my clients are trying to improve privacy. I would expect I still think blockchain technology is in the privacy space a ways off. But importantly, the fact that you could send something that kept you anonymous that was of value to someone else and receive goods made Bitcoin very popular on this. And this use kind of shows the value of blockchain technology in certain respects, such as the anonymous, and also the people buying this were anonymous, but they also felt comfortable enough that their purchases would be recognized because the blockchain is immutable. You can't change it. It's appendable. You can add to it, and those are really crucial. Those themes will continue on, even though this use is stopped. So as we mentioned, it has an incredible amount of security. As we mentioned before, the SHA-256 hash can be decrypted, but it would take about 1 billion years. This quality of security and the hashing that blockchain capitalizes on clearly makes it a technology that isn't going anywhere anytime soon. And then kind of talking about the issues, why did blockchain stop doing as well? So one major thing is, so in my first presentation, I talked about node operators, payment processors, and that sort of thing, and kind of understanding how those work is helpful for understanding this. But just kind of in summary, as the price of Bitcoin increased substantially, I think it hit its peak. It definitely came back down a little bit, but even now, due to the high popularity of Bitcoin, the miners were actually causing inefficiencies, because then they were able to ask for high fees, high average fees, and these fees were basically required for getting a transaction across the blockchain in an efficient manner. Because you got to remember the nonce values, which we didn't talk about in this summary, but is in my original. Those take a lot of computations to make a nonce value, and then the nonce value then is required for that transaction. But as there's more transactions on within a blockchain infrastructure, that becomes less efficient, and then it takes more computational power, and then you have the Bitcoin miners then wanting to sell their computational power to the highest bidders for fees. So this was part of the downfall of Bitcoin. Interestingly, in my first kind of webinar, I talked about the possibility that actually has happened since then of forking the blockchain. So forking is typically associated with malicious activity. However, in this situation, it was a definite positive because it basically reduced the time and the computational power needed to create a nonce value. So I would look for, if you want to and look at kind of how that works, you can do a simple Google search of virtual currencies made from forking the Bitcoin blockchain. So what happens when you do that is you keep all the positives of the blockchain, and then it allows you to change it to create efficiencies, or try to create efficiencies that will eventually overtake the original virtual currency. However, even though Bitcoin has struggled, I think it is largely still considered probably the most popular virtual currency. Okay, so now we're going into our final section here. This section will cover kind of what to expect. So I went through and I just provided some industry-focused feedback here in these next couple of slides. So the first thing is the supply chain. Blockchain technology, I think there's a lot of commercials. I don't know, I think at least in the US, a lot of commercials that show companies like UPS, FedEx, the shipping companies here that claim that they're using the blockchain to ship things. And in theory, that is maybe a very pure application of shipping. Like blockchain fundamentally pairs very nicely with supply chain optimization. So, I mean, if you wanted to go into an industry and you were a specialist in blockchain technology, it would be hard to argue there's a better place to do that other than a supply chain company or a supply chain optimization. The supply chain industry in general is going to be they're going to probably continue to lead, especially for 2019. As we talked about before, the major issue that supply chain has had is some of the smaller companies were trying to incorporate technology before it was mature. And basically there was inefficiencies created that could have been avoided by using already established solutions. So when you're within your, when you're trying to find use cases within your current job or in school, when you're thinking about use cases, I mean, it's very important to consider what other viable alternatives there are. Because when you're suggesting to go with a blockchain solution in 2019, unfortunately, it's very likely that it's a high risk option. So you just want to make sure that those that you're advising are ready to have a lot of upfront costs that may or may not. It's very difficult to say at the moment will be recouped in the long run in like efficiencies and those sort of things. And then also the financial services industry was among the first industries to attempt to utilize blockchain. Unfortunately, their use is more of a kind of a partial use. They use it, they pick and choose where to use it in large part. There are a couple larger companies that use it very well. And also the financial services industry, if you want to include startups, there's been a lot of virtual currency startups. Those are extremely high risk, but they also lead to the most innovation. I don't know if I'd advise anyone to join the virtual currency blockchain startup unless you can really understand what they're doing and you really believe what their kind of value add is before joining. And then the largest threat to the blockchain technology is governance. So it's wanting to track everything and kind of control the blockchain. There's not really a great way to do that at the moment. The way that companies are doing it right now is creating a lot of inefficiencies, and then it's essentially the governance model that is being used in most cases is directly related to old technologies or something that it's not narrowly tailored to blockchain technology. But also, if you Google governance for blockchain, you're going to find a lot of innovative use cases. So although I do think this is a large threat, if you're trying to apply this and it's a net new ad, if you're advising someone to do this for the first time, governance is extremely risky for blockchain success because it has to be right. So the key in 2019 is to realize blockchain will not yield immediate results. There's no out-of-the-box solution that's going to be, well, let me take that back. There may be some out-of-the-box solutions that I'll hit on in a couple minutes that won't be a complete blockchain solution that might capitalize on certain things. But I wouldn't sell, if you're trying to talk to someone within a company and you find a potential use case for blockchain, I would not say it's a quick win. It's not going to yield results overnight. Unfortunately, things like legacy infrastructures, which is a huge issue for a lot of my clients, they want to do something innovative. Oh, wait, we got 15 systems that can barely even function as they are. We have regulatory requirements, and these are going to increase, in my estimation, in 2019. And we're hoping that governments are smart enough to not, to only regulate, hopefully, virtual currencies and not so much blockchain itself, but due to things like tokenization, which kind of blur the line between virtual currency and actual property. It's right now very uncertain. And then we have corporate buy-in. So people might think blockchain is a buzzword. I don't think it is, but the fact that it's not going to yield quick wins, and the implementation is likely to be high, and there's likely to be infrastructure changes that need to occur, it's going to give a lot of opportunity for people to not buy into blockchain, especially in the early phases. In 2019, what I would say, if you want to keep track of blockchain technology, supply chain industry right now is going to continue to lead in 2019. You're also going to see startups. The thing with startups is you might see a startup that revolutionizes blockchain, but if you want steady growth and kind of a realistic model for incorporating blockchain, I would highly recommend looking at the supply chain industry. The reason is there's strong competition in this market to utilize blockchain. It's a selling point. It's a big selling point in the United States. Europe, I'm not so sure, but a lot of benefits can actually come from having a first kind of blockchain solution. And with that said, obviously, if you want to try to become a blockchain-focused professional, I would absolutely look at the supply chain industry. I would look at consulting. I would definitely look at some startups. I would look at the financial services industry, because I think they're going to be forced to kind of come around more so than now. And then I broke down the rest into these three little things. So I was thinking about how to break this down. So we have 3 seconds. So for the next 5 years, here's what to expect. So you're going to see a lot of blockchain solutions that combine some elements of the blockchain. So either immutability, appendable, you're going to see things like capitalizing on tokenization, decentralization, and it's not going to necessarily check all the boxes, but it will check some for sure. In service focused industries, as I mentioned before, expect a lot of difficulty getting blockchain solutions or use cases adopted in the early phases, but expect opportunities to maybe get inspired offerings. So things like tokenization. So these complete blockchain offerings that I mentioned here are likely not to develop, in my estimation, for the next 5 to 10 years. So these solutions will check all the boxes for blockchain technology. So look for solutions that really focus on encryption. These are things like document management efficiencies. We got monetized tokenization, which I'll hit on in a second. And then we have immutability, things that capitalize on the non-editable, the finalization of the qualities that blockchain provides. And then we have more decentralized offerings as well. Here's a quick tokenization example. So imagine buying real estate. So it's hard to invest or sell just $1,000 of real estate at the moment. But with tokenization, you could transform any property. So this could not only be real estate, but it could be a painting or something. So say the value of the property is $100,000. You could easily convert that into 100,000 tokens. And kind of like the Venezuelan government, you could keep 90,000 tokens and sell 10,000 on the market. And you can use services like Ethereum that allow you to create smart contracts to sell that. Now, there's one major issue with this currently, even though I think this will be solved by regulation. It's hard to understand if someone doesn't want to honor those tokens, even though you don't have to worry about them being captured in the ledger. You still have to worry about you losing money because there's a lack of trust. The trust isn't with the technology, it's with actually selling those tokens you buy to someone else as real estate property. So look for this area. If it gets regulated in countries, this is going to explode. You're going to see people tokenizing their cars. You're going to see people tokenizing anything. You could technically tokenize a computer. Say you buy a computer, you only use it half the time. So, I'll sell half the use of my computer. Things like that. So this is a really exciting example, and expect this to really, really kind of take off in 2019, even though it could be as long as maybe 2022 until we see any real development in that space. And then finally, what you're going to see, I think in another 10 years or so, is blockchain enhanced offerings. So these are mainstream solutions. These will be out of the box, but these solutions will use other developing technologies within their blockchain. So things like Internet of Things, like your Alexa and other things will start incorporating some of these technologies. And then they'll also incorporate things like artificial intelligence. So imagine like creating a system that uses tokenization, but uses AI to make the smart contracts. So say property value goes down. So to save your investment, AI tokenizes part of your property without telling you and sells it just to make sure you don't lose too much of your investment. And then it buys it back when the time's right. I think the tokenization aspect is going to be huge with blockchain and things like that. And also the way Amazon's investing in blockchain. I wouldn't be surprised if Internet of Things, Alexa capabilities, shipping capabilities make a big jump forward and maybe show up even sooner. These yearly estimates at this point are very difficult to make. So in conclusion, currently in 2019, there's little enterprise blockchain use. About 1% of enterprises have deployed some sort of blockchain solution globally. Around 1/3 of enterprises currently show no interest in blockchain technology, but I think they will soon. And then the other 2/3 of enterprises are either interested in blockchain or are planning to incorporate blockchain into their long-term plans. So this fact shows that if you become passionate about blockchain, there'll be opportunities for you, career opportunities, ways to apply, kind of strategize and help companies grow using blockchain. So that's it. Thank you. Yep.
Thank you, Kenny, for this great and very informative webinar. I would like to inform the audience that PECB is working on a detail-oriented blockchain training and that we will inform you soon about its readiness. Now, we will take some time to answer some of the questions from the attendees regarding today's session. Because of the time limitation, we will only be able to answer 2 to 3 questions. The first question is, will we be able to regulate decentralized exchanges?
So right now, I would say the way to regulating, so if you regulate decentralized ledgers, there's problems with that. But kind of with some of the more exciting applications, such as tokenization, and the way that I'm seeing regulation that's going to impact it is going to be on the back end. So once you buy the 1,000 tokenized coins of property and you think you own 1/10 of a piece of property, you're going to see regulations that regulate that transaction. So watch for sites like Ethereum to be regulated and make very solid contracts when they exchange tokenized currency for basically property value. So I would look for, I'm hoping if the regulation comes within the actual distributed open ledger, you're going to see blockchain have a really hard time working at all.
Thank you, Kenny. Another question is, can blockchain systems comply with privacy regulations?
Yeah, totally. So right now, there's not a lot of, well, it depends on the use of privacy. So privacy regulations themselves, like the CCPA and GDPR, they can coexist fine. If there becomes privacy regulations that is focused on like identification, that could become an issue. But so far, I don't know of anything there. And also, I just want to say my email, I think, is on this last page here. Feel free to reach out and send me any emails if you have any other questions. I actually have a client meeting at 10 that I have to actually run to, but thank you so much for the opportunity to present, and I look forward to receiving anyone else's questions.
Thank you, Kenny, again for this great insight on blockchain, and thank you everyone for attending today's webinar. I would like to let you know that this webinar will be recorded and posted on our website along with the slides of the presentation. For more information about BECB or upcoming webinars, please visit our website www.becb.com. Thank you all and have a great day.